So for the next 2 weeks, we will be bringing back some of our favorite stock pickers who will have a list of stocks they like heading into the new year. Tonight's guest likes large cap companies. Last time he was on in June, he recommended JP Morgan, which is up 26%, UPS, which is up 17%, and PepsiCo is 4% higher. Joining us once again is Hank Smith, Chief Investment Officer at Haverford Trust. Welcome back, Hank. Nice to see you again.
Good evening, Sue. Good to be with you.
Bill just mentioned some of the details on FedEx, so that's one of your stock picks. Let's start there. Why do you like it?
Okay, it's certainly a contrarian play. It's underperformed dramatically over the past 2 years. They've had 4 big headwinds. You've mentioned one, losing the Amazon business. Secondly, they've been making some major investments. That's impacted earnings. They'll be getting through that as we get through 2020. The merger with TNT in Europe, it'll be 5 years now. They'll finally be fully integrated this spring. And then fourthly, the whole uncertainty around trade and tariffs has had a greater impact on FedEx because of their more business orientation. So a lot of these headwinds should fade as we go into 2020, right. and we think the stock should do fairly well.
Your second one is CVS, maybe another contrary play. I mean, here's a company that's trying to redefine healthcare, bought Aetna, as we know, but this is a stock that's been in a downward trend for the last 5 years. So what's going to turn it around, do you think?
Well, Bill, in fact, the past 3 quarters, they have beat both on the top and bottom line. That's been underappreciated. The merger with Aetna is going better than expected in terms of integration and also in terms of paying down the debt. So we think if they can continue beating expectations over a few more quarters, you're going to get some multiple expansion because it's only selling at 10 times earnings, yielding over 2.5%. This is not a challenging bar. And as you said, they are redefining healthcare. They will be part of bringing costs down.
And lastly, Home Depot, it has had a really tough year. It has sold off at different parts of the year. But you think that it's basically on the comeback trail, mostly due to management.
Yeah, so Home Depot made an all-time high a couple of months ago at 139. It's off a little over 15% on the recent earnings. The earnings were okay, but they guided down based on softening of lumber prices and also some investments that they are making. They're taking a little bit more time to play out in terms of rewarding the bottom line. This is a very, very well-run company, and the decline in price is an opportunity for investors who don't own it to get in.
Hank Smith with Haverford Trust. Thanks, Hank.
You bet.